How's it going, everybody? Today, we're going to be getting into how I trade the ICT Turtle Soup as my one setup for life. Um, in my opinion, in my eyes, the Turtle Soup is the start of every reversal, um, which turns into an expansion or accumulation. Um, so if you're in on the Turtle Soup, you have nothing to do but kick your feet back and just wait until take profit hits. Um, Gonna get into just what the turtle soup is, how exactly I use it. We're not gonna get into how I trade it intraday, but how I almost can use weekly profiles and break it down to where I almost use it intraday, but just break it down to each daily candle. And then from there, the next episode, I've had some questions about doing how I traded intraday with time-based liquidity, just with everything involved. Because a lot of people can get zoomed in on the 1 minute or even sometimes the 5 minute and see a sweep one high and not just see the whole picture of the painting that's trying to be painted within the market and trying they just get too stuck on a lower time frame or just get too stuck up in a number or just not trading the chart and trading their P&L. So that I think that's what's going to be the next episode. Might get into a little bit of that today, but we'll see. So the turtle soup is pretty much the counter to turtle traders. Turtle traders buy breaks above old highs and the breaks below old lows. With this being the counter, the turtle soup pretty much chops up the turtle traders and makes them into a soup. All right. Main questions we're going to kind of focus on today is what time are we trading on the monthly, weekly, and the daily? Do we have a strong weekly profile as well? Okay. As always, what is the institutional order flow showing us? Where are we in the high time frame range? Where's liquidity engineered above and below? And also, is there a high time frame market maker sell model or buy model? All right. And as always, if you miss the soup, there's always a valid entry to get back into. Whether it be an order block retracement, if you like trading inverse fair value gaps, you can do that as well. But what we're going to be focusing on today is a high time frame market maker buy model, which has a couple accumulation legs, um, with also their respective turtle soups, um, and just what the market does. Kind of have to train your eye to see exactly you know the way that I see. You don't have to see exactly how I see, but just to see the ranges and exactly where we're souping and not to just have to mark out the soup high, soup low as the whole range, mark between them and see those as your accumulation ranges. We're going to get to the charts now, see if we can mark a couple things, learn a couple things, kind of keep it short and concise as well. And yeah, we're going to get into it. Okay, so here's the chart. I know it looks confusing, looks a lot at first, okay, but it's a lot of just simple key factors. All right, just got to remember what time are we trading within the monthly, the weekly, and the daily. All right, we're showing the weekly and the daily, excuse me, the monthly and the weekly um higher time frame accumulations. Okay, we see that we S&T this low, then take the range low, 50% range high, okay, and then right back to range high, 50%, past the range low, okay. All right, after we start accumulating, we have an accumulation range here where we leave equal highs, obviously. Break down, soup the highs, then break lower. All right, soup the highs, then come back to soup the lows. All right, have a simple deviation to the 2.5 deviation. Right, another high time frame accumulation. This can be seen as an accumulation as well, but um, not trying to complicate it too much because I know it's already a lot on screen, but just showing the accumulations and the back-to-back, soups, higher time frame. And then I'm going to show that how it lands us where we're going to be um, finishing out one part of the market maker model. All right. And also showing what the higher time frame institutional order flow is, as well as where we are within our range. Okay. So we're gonna go ahead and delete all of these. Okay, so now with everything deleted, we were just trying to see our high time order flow, see where liquidity was engineered, see if there was any high time frame market maker models, right? So now we zoom in to the daily, see that we're reacting off of our breaker, fair value gap to the upside, as well as inverse VI. Don't quite make it to this VI, correct? But nonetheless, we start delivering bullishly, correct, to the end of the week. All right. So rolling into the third week, what should we expect? Should we expect to snap to the DOL? No, because we have a retracement expansion for the first week, retracement expansion for the second week, and little keynote, but we always have, well, not keynote here, but Friday is obviously always the first Friday. Our NFP is always the first Friday of the month. All right. And you can see with NFP, we manipulate down into our PD array, our breaker, high time frame, fair value gap, as well as daily inverse, VI. We manipulate down and then distribute up. But we don't high time frame distribute up. Okay, we just kind of chop around the order block. All right, and then leave some equal highs and some wicks. All right, so rolling into the third week, I would like us to come into this fair value gap, this wick right here. If we make it all the way down to this wick, that's why we wait and react instead of trying to predict. All right, let's go down to the lower time frame. Also see our lower time frame accumulations as price is fractal. We have our accumulations, accumulation, 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 higher time frame accumulation, right? So we have our first day of the month, retracement, expansion, retracement, expansion, right? We have our 4-hour order block that we souped, wicked up, reacted off the order block, filled the wick to and through as we changed order flow, delivered buy side, and then started chopping around the order block on the other side, or to the upside. Okay. Why did we not deliver the weekly DOL? Or the monthly DOL? Weekly and monthly. Depends what week we're in. But why? Because it wasn't the right time to. Alright. So going into the next week, what are we expecting? Monday to probably accumulate, right? We do break below the low, but we don't close below. But it's not like we're gonna, come up here and take this on the Tuesday. So now we have our Tuesday coming into the order block. We can go down to a low time for our. Now that we come down to the 4-hour time frame, this is where it puts us. But we can see we come to the 4-hour order block and to the wick. All right, we do have low resistance liquidity, but this is a protected low because we swept a sell side level and delivered from our high time frame PD array. All right, let me take a drink really quick, real fast. Alrighty. So we see that we return to the order block, right? And it has an FEG. This FEG is not filled all the way to right? So we're able to use the wick here. All right. As for the Wednesday, we can drop down to the 15-minute and see that for open, we had a manipulation up, created a Judas swing, engineered liquidity, took that in the PM, sells are the next, session in the afternoon session, not the lunch session, but the PM session, right? So we now form a good high time frame rejection block, delivering from our high time frame PD array at a pretty decent time of month, time of week, and day. All right. Thursday, obviously has a good chance of being low of the week just with how, your weekly profiles work. But obviously, it's not just, luck for it to be Thursday or Wednesday or Tuesday. Okay. You have a lot of factors basing that off of. Um, but with all the factors we've come across now, we've had a accumulation, right? Another accumulation with the second day because we didn't break any significant high or low. So it's, just accumulating here. This is nothing special. The third day, we manipulate down into the PD array, create an order block, right? We closed above the previous candle. Yeah, we didn't go above the wick, but we'll see that I'm not quite worried about sometimes closing above the wick as long as it's the right time for order flow to change and, the right time for us to proceed higher or proceed lower. So we're going to go ahead and put one buy in here and see what it does. We're going to be rolling into the overnight session and into Thursday on the 1 hour chart. Now rolling into the pre-market session. And we see pre-market, we went ahead and accelerated and took this level of buy side. Do I think we're going to turtle soup or whatever this buy side? No. I think we're going to react bullishly from our obvious PD array that we had marked. Continue to take the buy side and then see what we do. Leading into Friday, seeing what our daily candle closes like, as well as, the 4 hour candle. Okay. So also in this, we're going to be looking for a chance to get back in here now that we've created a higher time frame breaker, leaving fair value gaps, as well as our higher time frame rejection blocks. We have more than enough to protect us from taking our new protected low. So we have protected low, which now will turn into engineered high resistance liquidity. But we won't take it, obviously, because we have a path of least resistance above. Okay. Just gonna say we can get in at this low. Kind of peaked up a little bit on us, but I can take this here, knowing that, if we retrace down to here, that we shouldn't take this low. All right. I don't see us taking Wednesday low. All right. All right. And I also don't see us taking, all of the pre-market low. I see us expanding. All right. We have a BPR, which could lead to a breakaway gap, but we see we've displaced down to the breaker. Okay. And we can go ahead and safely buy here, knowing that this will be the low of the week leading into Thursday and Friday. When we get this, that's an even better buy because we leave a fair value gap, displace into another PD array, higher time frame PD array. Had some news there, so candles were quite big. Let's see, leading into Thursday. Oh, we had FOMC. So as you can see, FOMC manipulates down, Scares you a little bit. You got a big candle, all right? But we manipulate down, open, low, high, close. Okay? It's kind of hard to see how far we wick down, but right back to, the order block breaker. All right? So now that we're in here, we're in a good level within the wick of FOMC. Nothing to do now but hold our 3 contracts till market close and just see what we do into Friday. Equal highs, lit wick, all right, as well as wick, low resistance. And that's how Thursday closes. Okay? With Thursday closing above Wednesday. Let's see where Wednesday would have closed. So roughly down here. I mean, I you don't gotta be a fucking genius to sit here and tell me that Friday, is not gonna or is gonna take this high, right? I mean that's obvious. Okay? I mean anybody can fucking do that, right? Thursday, I mean guys, come on. And intraday, I mean if you're in Friday or Thursday, I mean obviously some people are scared of trading news, whatever. But I mean just look at this, guys. I mean that's bread and butter easy. That's easy, right? See these highs? Fake as hell, okay? There's no way possible that we do not take this high, right? Even in a bearish market, we're gonna sweep these before we deliver bearishly, okay? All right? And especially it now being the previous day liquidity, okay? I don't care that we swept this into this order block. I don't care because high time frame order flow has changed. We delivered, right? Delivering again. Expanding market, okay? And yeah, you can sit here and say this is hindsight, whatever, okay? But, we marked out all of our PD arrays and showed where the turtle soup happens, where it doesn't happen. Now we're zooming in on just one of the examples, okay? I can make 20 episodes, 40, 50, 60 of all the examples, right? But like I said, it's sometimes harder for people to get in intraday and, know exactly, what liquidity level we're going to. Sometimes you get in, uh, within an hourly candle thinking it's going to expand to the weekly DOL, and that's just not quite how it happens. You got to take each candle as each candle. All right, as each 1 minute candle, as each 5 minute, as each 15, as each 30, 1, 2 hour, each 4 hour. Okay, you have to take them each as all of their own. Look at all of them differently and independently, right? The same as each trade you need to look at is independently, all right, as all as its own, all right. We're gonna continue here. We've already taken the previous day's high liquidity and thought we might have wicked, and I was gonna say we're gonna fill that wick, but went ahead and did it for me. And look at Friday. I was gonna say we can get in the order block. I'm sitting here clicking too fast. It's whatever. Because we don't even need to get in there. Like I said, we can just kick our feet back. And look at that. We deliver the DOL. Okay, we get out one, get out another, and see what time it is. Rolling into 3 o'clock. Even rolling into 3 o'clock right here on this final candle. Ooh, like, unless we roll into Monday, right, and have an end dog that we react explosively off of, right, we're most likely not just going to sit here and retrace. Okay, we're pretty strong. Order flow on the monthly, weekly, and daily time frame to the upside. So we're probably just going to keep expanding. This is leading just to the end of the day, or actually, yeah, into Sunday. No inwalk. Keep expanding upwards. You can just hold this the whole next week, right? Is this just Monday? Or no, this is Wednesday. And you see Monday, Tuesday, broke a low. Most likely SMT'd at this low, but took out all the time-based liquidity on Monday, right? into a 930 Judas, right? We see 9, 9 and 10 into the wicks. And this in itself is a model, right? You're in the wick. We're going to go right here within the wicks, okay? And we close within and react bullishly. SMT here, even better, right? Because with, never mind. But yeah, it's rejection block, turtle soup. We sweep London, form a uh, form another Judas swing with the New York Open, sweep into the rejection block, which is obviously not the best right here. Let's see if we can get a 4-hour one. Yeah, sweep within the rejection block, distort, range, take the range low, with this being the range, you know, look at its smaller time frame, right? With this one candle being the range, we take the range high, that wick's right there, right? Take range high, 50%, range low, same thing, right? With this candle being the range, not this low, this candle, this this black 4-hour candle, sweep the high, range 50% low, low, range low, into the order block, rejection block, correct? Right? And we're just, to make it look even better, SMT at the low, right? And boom, right? That is a model on its own, okay? I will show we'll get into that more, right? I can show, plenty of examples of that as well, just into the wick, all right? And even better with an SMT, all right? So what day of the week is it? Wednesday? Long wick? Or well, whatever. It's probably gonna keep expanding upwards. Range. See, we don't take the range low here, but we close within the rejection block. 2 p.m. Thursday. We just range. Probably SMT at these lows with NQ. This NQ's in an expanding market like this. And with how much higher ES was, NQ's more likely to take lows like this and build liquidity for later. But we'll get out there, getting in, right here and holding all the way to here. And where would we set our stop, you may ask? Good Lord. Go back to Wednesday. See, we created our order block. See if we can get the retracement. Yeah, there we go. Well, even like that. But see, stop below the PD array. Right? Could have waited for the reaction. But if you're to get in there, you saw that stop worked. But even if you're in here, you know, wait for the rejection block, close. Oh, even at this candle, right? And just for the first level, you usually get a 1 to 3. Then you fractalize time. You put this into a 1 minute, 2 minute chart, right? See this on the 1 minute, or did I say 2 minute? Put this in a 1 minute, 5 minute, 15-minute chart, right? Have some type of formation like this, right? 1 to 3 RR, right? Pretty simple. All right, we're gonna go over the notes one more time, and then be done with this episode. All right, got ahead of myself a little bit, but gonna come back and do this one thing because I want to go over where would you set your stop? Okay, so on the 1 hour chart, come in to PM session, right? You get a good 1 hour candle. You have your rejection block with us thinking, that Wednesday is gonna be the low of the week. If you're wanting to swing this, uh, and or even just think about it in a fractalized time. Uh, you want to think about this as a 1 minute chart. Just zoomed in. This can easily look like a 1 minute or 5 minute chart, right? Okay. So, uh, with us getting in, at the close of, say, this is a 15 or 5 minute rejection block, and we want to get in within the wick, right? We position ourselves within this wick. We can get anywhere here. And we look, where is our PD array that we're delivering from? Now we have ourselves where we want to be positioned, where we're also delivering from, correct? After we've swept the sell side level and formed what looks like not a fake bottom or a fake top, looks like a actual real solid top or bottom. And been trying to go over that, but with chart time and candle close times, you'll start to see when exactly a real top and bottom forms. And this is what, it can look like. Have a 1-to-1 body to wick size, sweeping sell side, aggressively sweeping sell side, not just like this. You see how we sweep sell side here? We leave a fair value gap, but it's, not super aggressive, right? So we boom and then deliver one more time. So we soup what, a lot of people, or excuse me, we soup what a lot of people would think would be, your first soup. Okay. We leave these equal lows, relatively equal lows. All right. And we didn't really show any signs of acceleration. Came in and closed, within. That's when I would like to see some closure above, right? We did close our. See, I was gonna say we closed above the candle, but I would at least want to see us close above the wick. Not close above the open of the candle, but close above the wick, right? So we position ourselves here with our. You don't want to hold all the way up to here. What we can put our first take profit here, okay? And with our PD array, we see, another order block. Bring this little guy over here. So we have the fair value gap we're delivering from, part of the fair value gap that hasn't been mitigated. We have an order block and a breaker, a high time frame breaker. All right. So within this next candle, we would want to see us come in to the rejection block and wick up. So what I'm going to do is buy right here, expecting that we don't break the low of the candle. So before I go to the next candle, I'm going to pull this up to right here. And I'm going to get in one more, right? And you see our stop is below. Even though we're souping, our stop is below PD arrays. Still in the same time as we were in, right? So it's still, all of the high same probabilities, just showing where a good stop would be, right? And you'd say, oh, you want it below a low. But if you're getting in below, if your stop's below the low, obviously you can do that or whatnot. And probably be super almost, like a sniper and never get it wrong because you have so much wiggle room. Especially if your DOL is even 60% correct, because you could, do this, retrace, and soup this low, right? Again into a, order block, PD array again, and be safe. No. but or not sweep this low, but sweep this low into this wick order block and be safe. Um, and then see if you came down again, then you put your stop below that low. But I like to keep at least a 1 to 3 RR, and here we have a 6 RR to the DOL. Um, but we'll keep this first one, uh, somewhat 50% of the range, and we'll just do here and make it a 3 now. Because I still think, we can put it to this candle close. Because I just wouldn't set a target down here, right? This is so low resistance within the, uh, manipulation cycle. If you're seeing this as your accumulation and your final targets, uh, there's no point in getting out at the, beginning of the manipulation, like, because we're expecting all the way up here. But to each their own. I still do it sometimes my own, just because I'm, mentally weak at times. But we're all here to get better. But next candle, bam, turn screen, open low, high close, open low, high close, and add one there. And then now, not the, see, we close above, blah, 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 react, come back down, sweep those lows, and then, continue to our sell level, or to our buy side level. And see, setting into the wig is dumb when, you have such a fake top. That's where you'd set your stop, then you pyramid, then you can go, and then once you break this high, or the manipulation leg high, you can come to break even, and yeah, not too hard. Um, and the way that you see such high RRs with this is, say you're in here, right, and you're in with, we got in here, you can always pull your stop to break even super super soon, and still an 11R, 25, whatever you want. Um, if it doesn't break the low of it, you didn't have it in your risk. So, but yeah, we're gonna go over the notes one more time and then be done. All right, so we went over what the turtle soup is, what's its purpose, whatever you want to call it. Um, we went over what time, of the month you're trading, what day of the week you're trading, and what day itself you're trading, and how it has importance. Okay, we went into how you can see if you have a strong, weekly profile, such as if you're bullish, looking for a Tuesday or Wednesday or Thursday low a week. Bearish, looking for a Tuesday, Wednesday, Thursday high week. Um, and always if you're in that, uh, always within that weekly profile, and you see, oh, like we did, we had the Wednesday low a week, Thursday closed, and it closed above, and just so full that you can probably a monkey could look at it and see that probably point up and see it's going to keep going up. And yeah, you can sweep the previous day high. Uh, but as we saw, we're going to keep filling the wick to and through just because of the monthly, weekly, order flow. Right? We saw where we were within the high time frame range, where liquidity was engineered, how it was engineered, right? Where the market maker model was, where the weekly draw on liquidity, our monthly and weekly draw on liquidity was, all right, and how we could position ourselves within there, right? We saw if we missed the turtle soup, how is there a valid entry, and where can we pyramid in, all right? And that's just with reading order flow, right? Um, with being on the daily and 4 hour and 1 hour time frame, you just got to remember that time's fractal. It's kind of what we tried to go into there at the end. We'll go into that more next episode. I'm trying to go more intraday and show, where we can see the manipulation versus where we, see the actual draw on liquidity being spooled out to or going ahead and getting taken. I want to thank y'all for listening in, joining in for this video. Um, like always, just leave some comments if there's anything I can do to improve, anything you want me to go over, anything that you have problems with. Um, as well, or as always, we'll see you in the next episode. Hope everybody stays safe and, does well. Have a good one.